and welcome to today's morning report analysis videos with me, Rich Perry, market analyst at Hantec Markets on Thursday, 23rd of November. We had a fairly sharp dollar correction yesterday. That was sort of driven by FOMC minutes really last night. Let me show you how the dollar has dropped away back at lows of sort of mid-late October on the dollar index. And this sort of move driven by sort of treasury yields falling away on both the 10-year and the 2-year that I've watched here, and that move came after the Fed meeting minutes. Meeting minutes which suggested that the Fed was going to hike in December. That's pretty much nailed on, but it's the fact that the Fed is concerned about inflation going further out, and the fact that inflation is not really picking up, and it is going to be data dependent, I think, going forward. Now this sort of puts into question whether 3 rate hikes, which the Fed has already penciled in, is actually possible for next year, and subsequently the longer end of the curve has certainly fallen away on the back of that. Sorry, that's 2-year, 10-year fallen away. So these treasury yields remain an issue for the dollar, and subsequently falling away. Now what we have seen is a bit of a sort of a settling today. Nothing too significant in terms of direction. It is Thanksgiving today, so we're not expecting too many major moves on these markets, given that US trading is offline today. But the markets are fairly settled. There's a little bit of caution in equities, DAX and FTSE lower. They were sharply lower early doors, but they sort of rebounded since then. The S&P 500 fell away, as did the Dow yesterday, back from their all-time highs. And we've just seen a little bit of a slip today on European markets, but nothing major. But yeah, generally speaking, fairly settled, and it looks as though that could continue. Now, in terms of data, we've had the one of the reasons why you might have seen there, I'll get it back up, the euro outperforming, is that we have seen Eurozone PMIs, flash PMIs, come in much better than expected. Really strong across the manufacturing data, and also the services PMI as well, outperforming, and the composite as well. And this all sort of suggests this continued improvement in the Eurozone economy really gains traction. And there's not a great deal to worry about there on those PMIs, is there? We've also just had out the second reading of UK Q3 GDP, in line with expectations at 0.4% for the quarter. No great shakes, no real move on sterling on the back of that. A couple of pips here or there, nothing too significant. And yeah, sort of we move on. Other than that, we're basically sort of out of economic data now, because the US is, as I said, on holiday for Thanksgiving. So my chart today is the dollar Swiss. Now what we have seen, as I said, across forex majors yesterday was sharp moves to the downside on the dollar. Now this dollar move has, apologise, that's FTSE I'm looking at there. This dollar move has sharply dragged dollar Swiss lower. That's back at levels again not seen since October, mid-late October, and it's now building this little corrective downtrend channel, which is sort of posting lower highs and lower lows. You've broken below 98.50, which is a longer term pivot, having been supportive. It was again supportive, but broken below that. You're now sort of looking back at the fib levels of this rally. This rally that we saw back from September, October. You're looking at 38.2% fib, which is 98 figure, and a breakdown below that, you're looking at 50% fib at 97.30 coming in there. But look at 97.70. That is an old key breakout level. So that would be a neckline support. So again, below 98 figure, you're looking at 97.70, and then below 97.70, you're looking at 97.30, which is that 50% fib level. But you look at these momentum indicators; they are increasingly corrective. Those stochastics have just turned down again. The MACD lines are accelerating. The RSI is sort of at levels not seen since early September. So this is all sort of pointing towards this continued correction, and the corrective moves on the RSI tend to come back towards sort of 30 to mid 30 30 to 35. So there is room still to the downside on this move, and it certainly looks like the selling pressure that we've got through the big strong bear candle would suggest that any sort of intraday rallies are a chance to sell. So you get this chart up, and you think, well, okay, you've got that resistance that came in around 98.45, the old support which became the resistance yesterday, initial sort of resistance overhead, and then you sort of look up towards this 98.75 level as well. So that's a bit of a near-term sell zone, I'd say, 98.45 up to 98.75. So if you get a little bit of an unwinding move, as these hourly indicators do unwind, and those MACD lines have turned up, maybe the MACD lines is going to sort of unwind back towards neutral, RSI back towards sort of 40 to maybe 50. That would give you an opportunity to sort of come out again, 98.45 to 98.75 sell zone within that. So yeah, we're looking to sell into strength on dollar Swissy now as this trend channel continues lower. So I wish you good luck in your trading today, and I will speak to you later. Thank you.